Yo, what's good, y'all? It's Alex Kamoon here, and today we're going to talk about why you shouldn't want a large tax refund. Oh yeah, that's right. Let's get into it. I guess I got my swagger back. So honestly, if you really understood money and taxes and how these kind of things work, you honestly would never want a tax refund. So that's my goal today, is to show you why. So make sure you watch to the end of this video so I can tell you why, and then also give you my take on how you can avoid paying taxes legally. Now, a lot of people don't know this, but there's really two reasons why you pay taxes out of every paycheck as opposed to just paying one lump sum at the end of every year, right? So for number one, the government wants your money now, right? They don't want to wait until the end of the year to get a, check from you, right? Because they know that they have to spend that money now. There's things, there's programs, there's government spending that they have to do today, and they need that money now. So that's the first reason. Number two, they don't trust a lot of you mofos to actually be able to pay your taxes whenever it is time to pay them, right? Because, I mean, obviously there's situations people, have back taxes, all those kind of things, people still don't pay. So why would they trust most people? They know, come on, you know better. Most people are not good with money. Most people are not going to be able to get extra money every single month and put it away somewhere and have the discipline. Oh, that word right there, discipline, right? The word nobody likes. Most people don't have the discipline to have that money sit there, not touch it, and pay their tax at the end of the year. So what Uncle Sam does is says, yo,
listen, homie, I'm gonna just take that, I'm gonna hold it for you, and if we take more than we should have taken, we'll give you back some next year. Sound good? I don't care what you think, we're gonna do it.
That's how taxes work. So when it comes to the concept of tax refunds, what even is a tax refund? I mean, it's in the name, right? So a tax refund essentially is a repayment made to a taxpayer that paid more taxes than they actually owed in a tax year, right? And so if you get a tax refund, that's because you paid more taxes than you actually owed in that year. So it's a misconception that you're getting free money when you get a tax refund. It's not free money. You're just getting your own money back that you overpaid. So actually, whenever you do get a tax refund, that means you essentially gave the government, get this, an
interest-free loan.
Because let's really think about it, right? You give them money every single paycheck. They hold it for the year, spend it on what they need to spend it on, right? And then at the end of the year, they say, hey, you actually gave us too much. You can take this back. Right? So you just gave them a loan and didn't get any interest back on the repayment. So whenever you work a job, right, a legitimate job, you start a new job, your employer gives you what's known as a W-4 form, right? We've all seen this form. Most people don't even know what it's for, but it's essentially for you to outline your withholdings that you're going to take, right, from every paycheck. So it's going to tell the employer exactly how much to take out from every paycheck to hold back for the government. Now, most people don't actually set their withholdings correctly. So what happens is the government takes out more than they actually need to in most situations, right? Which is why a lot of people get tax refunds. So in theory, if you set your withholdings correctly, right, you would not get a huge tax refund the next year, right? Because now you paid the correct amount of money from every single paycheck to the government. But like I said, most people don't. So you give the government interest-free money and they pay it back to you at the end of the year. But think about that. If you did set your withholdings correctly, right, now you would get to keep more money every single month, which would mean you would have more money available to invest today, right? As opposed to having to wait for a tax refund to invest that money. Most people don't invest it anyway. You blow that money. So I guess you could say more people would just have more money to blow today than invest. But people that listen to Money Monopolizers, people that have any sort of financial common sense know that, hey, this is more money that I can invest. That's 200, 300, 400 bucks more per month that I'm able to invest. Think about how much in assets you can actually accumulate if you're dollar cost averaging, that tax money into the stock market or into a cryptocurrency. You're able to, buy assets at a cheaper price as opposed to having to wait a year for getting your tax refund. So it's much better to be able to claim that money now and have the power to decide what you can do with that money now, as opposed to waiting for the government to pay it back to you. So it's not saying that you won't pay any taxes, but I am saying you don't have to overpay in taxes, right? You shouldn't want to be paying more than you actually should be. Who wants to pay taxes, number one, right? If you do, this probably ain't the channel for you, man. Because I'm gonna say some things that you're not gonna rock with, and I'm very unapologetic about it. I honestly don't care about your feelings and how you feel about them. So it's probably best that you don't watch a lot more of this content. But if you don't like paying taxes, then this is the place for you, because now I'm gonna tell y'all how you can actually not pay any taxes. But before I do get into that, be sure to hit that thumbs up button for the YouTube algorithm so that they know that this is good content that needs to get out there. Look, people need to hear this message. A lot of y'all are getting cooked on your taxes. People need to hear this. So one thing that a lot of people don't actually realize is that everybody is taxed based off of their net income, right? Employees, business owners, everyone. Net income meaning your gross income minus your expenses or your deductions, right? But what happens is, as an employee, you don't have any deductions. Most employees don't have any deductions, so they're taxed pretty much based on their gross income. But as a business owner, you get to write off expenses and then you're taxed on the net after expenses. Employees don't have any expenses. So me personally, I paid a certain amount of money in taxes last year through my W-2 job, but this year I got all that money back because of my deductions from my businesses and the real estate that I own. So even though my W-4 form was filled out correctly and I paid a certain amount of taxes, the correct amount of taxes, I didn't even overpay anything in taxes, but the taxes I did pay, right? The taxes I did pay, I got all that money back because I have a business, right? So think about this. If I didn't have a business or real estate, that means I wouldn't have got anything back, right? Because I paid the correct amount of taxes according to my W-4 and my W-2, right? But because I have a business and real estate, I get all that money back. Why? Because you gotta remember, and I preach this all the time on this channel, taxes are an incentive system. When you do things the government likes, when you do things the government wants you to do, they reward you with incentives through tax breaks, right? When you provide housing for people through real estate investing, when you provide jobs for people through owning a business, when you contribute anything to society, right? And whenever you own a business, you're considered as someone that is contributing to society economically, right? You get tax breaks because of that, right? Now you get to claim all your expenses as expenses, meaning it's going to reduce your personal tax liability every single year, which is why last year I didn't pay anything in taxes. So I'm gonna break it down, right? So for my W-2 job, I make a certain amount of income, right? Now from that, I pay a certain amount in taxes. But when I own real estate, I get what's called depreciation, right? And so with depreciation, I'm able to take a paper loss, meaning that I'm able to offset all of my W-2 income with my real estate, because now that's another expense that I'm able to claim on my tax return that I previously wasn't able to claim if I didn't have that. And see, this is where most people don't get it, right? As an employee, you're not providing for anyone but yourself. So you don't get tax breaks for doing that, right? If you take care of only yourself, the government doesn't see that as something beneficial to society. You're doing what you're supposed to do, right? But when you take care of other people by providing housing and giving jobs to other people, the government's like,
hey man, I like that. I'm going to make sure that you continue to do that here in this country. So I'm going to help you and make it worth your while by not taxing you as much, right? And in many cases, you pay nothing in taxes.
Because remember, like I said, taxes are an incentive system. And as an employee, I'm pretty sure the only tax breaks that you can really get is mortgage interest deduction when you own a house, right? Because remember, the government's saying, hey, you're going to cover your own housing. You're not going to be homeless. Cool, we'll help you, at least we'll give you a tax break for that, right? Or if you contribute to your 401k, you get a tax break for that because the government's saying, cool, we won't have to take care of you in 40 years. You're going to actually contribute to taking care of yourself. Okay, cool. We'll incentivize you to continue to do that by giving you a tax break for this, right? Other than that, as an employee, you really don't get much. So at the end of the day, just know that it is a choice on whether or not you pay taxes. Yes, I said it. It's a choice that you are consciously making by choosing to operate in the employee quadrant or the business owner and investor quadrant. The tax laws, the tax codes are available for everyone to go out and utilize for their benefit. But the problem is most people don't. So don't complain when other people don't pay taxes. You're not using the tax code like they are, right? But anyways, that's it for this video. Hope y'all gained something of value from it. Hope you understand now why you shouldn't be screaming and celebrating when you get a tax return. Because now you're just getting the money that you already worked for back to you. You should actually be upset when you get a tax return. But anyways, I'll see y'all in the next one. What even is a tax refund? A tax refund essentially is a repayment made to a taxpayer that paid more taxes than they actually owed in a tax year, right? So it's a misconception that you're getting free money when you get a tax refund. It's not free money. You're just getting your own money back that you overpaid. So actually, whenever you do get a tax refund, that means you essentially gave the government, get this, an
interest-free loan.
So whenever you work a job, right, a legitimate job, you start a new job, your employer gives you what's known as a W-4 form. It's essentially for you to outline your withholdings that you're going to take, right, from every paycheck. So it's going to tell the employer exactly how much to take out from every paycheck to hold back for the government. Now, most people don't actually set their withholdings correctly. So what happens is the government takes out more than they actually need to in most situations, right? Which is why a lot of people get tax refunds. But think about that. If you did set your withholdings correctly, right? Now you would get to keep more money every single month, which would mean you would have more money available to invest today.